Hi, Happy New Year. Just having a quick look at these stocks and how I would use the matrix and liquidity to confirm what's changing in the market. So here I've got this set back in November, the November OPEX, which is about here. And I can see I've got a big buy going on there. So what's that buy related to? So we can see it here again. We've got down here, we've got a whole lot of buying in liquidity, and we've got a second burst here in the 28th to the 1st. So if I go back and have a look at that period, I can see here the first of the closing is here. I've got some on the 20th going through to the 21st. I've got some 30,000 in the money puts closing across, and not a huge deal new options open, but there's some options opening here that are in the money. The main thing is that I've got a closing of out of the money calls on the call side, and so we can see here that we've had somewhere in the order of 70,000 out of the money close. So there's not going to have a lot of delta being bought back there. The highest place of delta closing here is going to be in these puts on this side. So if we look at that, we've got two periods, we've got 19th, 21st, and then 21st through to the 26th. We can see that rolling through, and we can see this here on the 26th, 28th, missing the Thanksgiving holiday. We can see that there's a big section of buying there, and I've got this set at the moment on all, so I'm looking at all options, and that's the way that I like to look at the long dated stuff to work out the long positions, because the long positions are the ones that are being hedged through the option chain. The short stuff is really traders stuff. There's a little bit of obviously put and call selling for theta to harvest a bit of theta there, or options for income. But generally, it's generally that short dated stuff that I look at is for the trading side. So if we go here and we have a look, we can see we've had another large closing here on the 19th, going through to the 22nd. So if we go and have another look, here we go. Here's the 19th to the 22nd. We've had a very large buy going in there, and it's even shifted the price. It was just a short up well in the market anyway. So if we go and have a look at that this period here, we can see around the 24th. Let's just pop that back a couple of dials. We can see again we've had this large increase. Oh, we can see. Sorry, I've gone through into the short dated stuff. We can see here we've had this large decrease in the money puts and this large decrease in out of the money calls, and those have been easy to track in liquidity as well. So it's giving us a good idea here. We can see that we've gone down from 163,000 down to 117,000. So we've lost some 45,000 in the money puts. And at the same time, we've lost some in the money calls, and I expect that those were sold. People holding the whole of the position on the way down and getting the maximum theta burn. And here we can see this. Here we've had a decrease, which has given us that bump because there's just nothing holding this stock down. So we get this lovely little couple of bumps here, a couple of up days. Not as big as this recent update, but there's a 5% on the way through. Since then, we've just had a slow increase. We go through, this is now looking at the short dated stuff from the 19th. We can see, if I just pop this into the 22nd, you have to really look at these things very closely. The change is quite incremental, and so you can see it here happening in the total puts or in the total calls column, but you can see it the differentiation is much easier with color in close. So we can see here that we've had a reasonable closing of in the money and just out of the money puts, and we had a really large increase, obviously, in the money calls, and that's because they've become in the money as it's bounced. If we get a little bit closer, say I look at the 25th. The 26th. I'm looking at Boxing Day. Again, we can see these here. We've had this large closing on the 26th. So if I just I open that up, we can see this burning theta has come through, and that's on the 26th to the 29th. And again, here it is, 26th, 29th. There's a really big buy. that big buy is mainly driven in the hedging market. Here then we can see that we're just slowly, incrementally going up. Here on the 29th, we've got a whole lot more new long positions opening. And there is some new longs opening out of the money, but not as many as we can see in the money. If we and also not as many as we can see if we're not close enough. So if we go a little bit closer, there's the 26th. I don't really need to remove that one. Let's go to the 29th. Then we can just start to see, here's a big line on the 31st. This would have prompted you, if you were keen on this stock, to say, all right, what are they doing here? We've got this very sharp falling in the money hedging, and a large opening of out of the money calls. So that here is people playing for this trade, and some people have already taken profit on that 15% jump to see whether maybe it's as far as it's going to jump. And when we get a jump like that, it might track back in price, back and touch a 0.5. Let's have a look how it looks close there. It actually was a little bit more filling there, and it was bought down into the close. But you can just see here in liquidity sentiment that it really has. It's lifted us back up to the same sort of liquidity. So a lot of the charge has been taken out, the same sort of relative liquidity as we see here on the 24th of December. So that's how I would go through and read these. Obviously, I like looking at the higher, the in-the-money trades. The in-the-money trades tell me a lot more. They're not people lottery ticketing. They are people really putting some big money on the table and taking some risks and eating away. And it's also those 80-20 traders, 80% long and 20% in vol at all times, hedging. Yeah, there's definitely some burn in that, but it's the safe way to play a market so you're not being affected by a black swan. So that's SMR. Let's have a quick look at iron, see what iron says. So iron isn't quite as strong. It's definitely had this bounce in close, but we can see here that it's had a series of big reductions going into that period. It's obviously started to move before. It's moved on the 31st. We can see it diagonally heading back across the page. And if we just quickly go in here, change this one to iron. Again, this is that's set up on all. So iron's had quite a good build and a continued build across that flat top, and then it's had a big bump. And here we can see this is the time when a lot of sold positions in the calls has been closed, and also on the 19th a whole lot of long hedging has been closed. There's also probably a little bit of put selling on our bottom here, and here we can clearly see the bottom coming in. If we just have a quick look what that does on the iron chart. It had a very big day. It had a 13% up day. And here's the two periods, the 5th of December, and here we can see, even on the top of this the Christmas peak there, we can see that there's still considerable buying in there. And if we could close in onto the 2 hours, we can see it bought all the way through to just before starting to fall, and we can see here that we've got some selling coming in here on the 23rd. Selling or hedging, whichever it was, there was enough action to drive that one down, and we could probably see that in close. That's the 29th. If we went back and we pulled ourselves through to, say, the 15th, and we put ourselves onto that Christmas time scale, there's the 19th. Let's zoom in a little bit. 22nd, 23rd. So we really want to be looking at, say, very close in here. We're going to look at the 22nd and the 23rd and see what it says. Let's start. You can see there's a bit of hedging there, but we can see here on the 23rd there's some real profit taking in here. We've gone down from 230,000 in the money calls to 200 we've gone down from 2 million, 200,000, and we've lost. That's small. It's smaller than my eyes make out. It's only about 1,000 positions have closed on that day. let's just clock it back 1 and see what it says, how bad my maths is. We can see that most of the positions we've gone out of the money here with a call, so that's a defensive position, or it could be that it's pulled back because of this opening of out of the money calls. They might be sold, they're very close to the money, or they might be just people positioning for this bump we see as we've come into the 31st. Again, we can see that the liquidity here equates to about the price here on the 12th of December. So both the tightness in liquidity and the price are about the same. So that might have taken a bit of the gusto out of that. We'll wait to see. The positioning is quite strong. It does look like it's had a little bit stronger buying than we saw in SMR. And we can see the second part of the day has bought quite well. We go and look at the short dated. I look at short dated is 0 through to 30 is what I consider short dated. A lot of people play them monthly on a swing, and they're very clear traders to watch. There are a lot of traders that trade in and out in shorter swings than that, but they tend to trade in smaller deltas. These high deltas are generally traded for month or fortnight periods. So let's just set this up so we can see where we're at. In the positioning, let's go through to the 29th so we have a good idea. So we can see here in the 29th, there was some good buying, and there was also some closings, taking of some profit, and there's a lot of squeeze here and a lot of puts closing during that day. That squeeze has really pushed that up. This is what we refer to as a squeeze. They've actually rolled these from in the money to out of the money. Much bigger gains out of the money, but out of the money positions are a direct result of people deciding they want a 20, 0.2, 0.3, 0.4 delta hedge rather than an in the money hedge. And then they would position themselves by having owning the underlying and then selling some out of the money calls, and I can't really see those there, so they might have been sold over a longer period of time. Let's, if we go and have a look here, we can see that there is quite a lot of out of the money calls opening later than the ones in the 0 to 30. So these are out there. There's not a huge number, there's something about 1,000 there. Definitely not as many as we can see puts being opened here. That also might be some selling of puts as they've moved off the bottom. A lot of traders are happy to naked sell, or we might find that some of these second positions here further out of the money are spreads. So these are the in the money losing the highest theta, and this is their defensive position, so their risk management. So iron, RS Energy, very strong buy through that period, and we can see it had those similar nature of purchases during those OPEX option expiry periods. Now let's have a quick look at Cypher mining, and Cypher mining has had quite a strong base here. It hasn't gone anywhere back. I don't actually know much about any of the business models of these. And we can see it's had an incredibly strong opening of in the money positioning here, even though it's had quite a good bounce up for the day. People have been caught out by it. They weren't quite positioned or ready for that positioning. Maybe that's because it's Christmas time, and we don't see a huge reduction of in the money puts, but we had already started to see that here. We can see that we've had a reduction here of 2,100. 500. So there's quite a large reduction there on the 30th rolling through, and again we can see some more reductions here. Not substantial, but there's definitely more reductions. And there we can see here in Cypher probably a little bit of put selling there, but we could also account that much more to a traditional sort of positioning. So let's have a look at Cypher again. So Cypher's looking really strong. What did it look like in its all positioning? It's the all positioning I have set up here is it shows me all options, all DTEs, and we can see that again it's fairly similar to, we just looked at iron. It's had quite a large in the money closing of sold calls, and so they've been getting some good theta out of those as they've rolled in. And here we can see a very large reduction across the board over that period in the money hedging positions. And you can just see that this whole time it's been building very strongly. It's a very strong looking stock. All right, the next one I was just going to have a look at was NVIDIA and what I think about NVIDIA. I do think that with the current things happening in Venezuela and things, that people might start to see America as a strength again, and that we might start to see some money flow across to the system, even though politically people might not like it. Trading generally isn't about politics. This is just about making some educated investments because of politics, and they might see that if Trump has been quite successful, that he might continue to be successful during his period in government, and that it's worth investing in some of the other ideas that he likes, being SMR, New Scale Power, and also in crypto. So this is NVIDIA. NVIDIA, we can see a couple of big buys here in the 2 hour. It's been going sideways for a while. I did do an update on Tesla. I do think that I'll put in Tesla while I'm talking, that my brain's going to... Here we go. Here's NVIDIA. NVIDIA this does look like a more defensive. There's not a huge opening of hedging here, but there is a little bit of an increase. We can see here there's a whole lot of out of the money calls opening and in the money closing. Where does that leave us? That leaves us sort of looking here in the 2 hour. Let's go down and see what it says. We can see here since the 26th, there was a little bit of a buy on the 2nd of Jan. That's pretty strong, that buy, but filling in from these buys here. That hedging still is sitting up there. There's not much buying that I can see. That hedging has really increased. I would say that that's probably negative, and this is really quite strong hedging, and we can see it here as being reasonably strong. Or it's not strong hedging, but it's the closing or buying back of. Oh, sorry, it hasn't clicked on. It's the buying back of those deep in the money calls that are short dated. So we can see that we've got very low DPI here. That doesn't really lend itself, considering we've still got a high price. It still looks to me like this is a deflating investment, not an increasing investment. If I look at the long dated stuff, this is a real killer. This shift across here is not the shift that we saw in Cypher and things like that, where we saw a whole lot of in the money calls closing, but we also saw in the money puts closing. Here we're seeing hedging increase. So this is very negative. It's a real change in position. It is people deciding, traders, investors deciding that they're going to short it over a period of time. So at the last OPEX, we went really quite short. We positioned ourselves in a hedging position, in a hedge position. We will have had an increase in out of the money calls as a ratio, maybe not as a ratio, maybe not as an outright ratio against the in the monies, but if we just looked at the out of the money, so we say we'll go this from 0 to 0.5. From 0 to 0.5. Let's have a look at what that ratio says. So these are the out of the monies, and we can see that the ratio has still diminished, it's still held up, so it's not as quite as negative as I thought. But really, when I'm looking at it, hedging has remained. These people who were hedging that 80-20, 80 long, 20 vol in a normal safety position has rolled out, and we can start to see out of the money selling here. These are increasing as the video goes along, and we can see that there has been a little bit of a buy at the top, but really not much. there was a bigger recharging here on the 25th of November. So if we went back to the 25th of November and had a look, we'll probably see that that's when the main recharging is. 10th of December, 12th, 12th, 12th. So this is really the recharging event here for NVIDIA. But I think that that's probably more to do with hedging positions. So it's the end of running into that earnings position. All right, we were going to have a quick look at two others, I think. We were going to have a quick look at Riot. Oh, actually, the ones I can see here are Muster. And AWST Muster. I don't know. So Muster here again, it's had a big reaction here, closing a lot of out of the money, but in the money hasn't really grown a lot. It's probably because those positions are longer dated. So let's have a look. So we can, oh, I've got this set the wrong way around. Still not very positive. It's not looking very positive here. These ratios are still not great. I think that it's not a very loved stock, obviously. There's still a lot of hedging in there, even though there's less. We're still up in this high put-call ratio. Isn't really much buying starting to happen in Muster. And DPI isn't terrible, but it's not great. It's just been going through a period that's low. Definitely here we've had a whole lot of buying, hoping that this was going to move forward, and maybe it will now. A whole lot of that hedging has come off. We've lost somewhere in the order of 40,000 between the 19th of December and the 2nd of January. We've had we were at 169,000. We're now at 129,000 in the same delta column, and during that period we've gone from 106. We've actually lost a little bit of steam in the longs, but we've definitely gained it in the shorts. Maybe that's people buying the underlying because they don't want to pay the high vol. So that's Muster. Let's have a look at excuse me, assist. Excuse me, tickling throat. Let's have a look what assist says. Oh, actually, let's just have a quick look what the liquidity said about Muster. Oh, yeah, Muster looked, it had a really big charge, didn't it, in the November period. So maybe they haven't really closed those positions. They've just held their. This buying might have actually been underlying. You can see it's got even tighter here. There's definitely an expected thing to happen. It's almost back where it started. Its drive on that ridiculous run. It started down here at 127. The buy-in is almost as large. All right, let's have a look at this. Strive, that's right, that's the name. So Strive, I've dibbled and dabbled in this, but it's really down to, it's definitely had a buy, it's given it a big jump. Will it continue? We can see here we've gone down from 57 to 43 in the money hedging on short dated, and in that same time we've gone from 6,000 through to 7,100. So there was definite expectation. It could have also been the driver for that because that required hedging. We can see here there's been just buying through that whole period, that whole dip. It's been considered a strong asset, but there's not even any in the money calls to see. It's really just that the hedging's come off. So people, because the price is so low, are tending to trade this with using the underlying for their long position. And just start to see here down at 0.3, you can see that increase from 30,000. So we had some 130,000, 100, 1, 2, 3, sorry, we've had from 1.3 million, now we've got 1.4 million, 1.34 million. So it's somewhere in the order of 600,000 options being added there. Oh, sorry, not 660,000. I'm adding an extra zero in there with my poor eyes. But we can definitely see that it has started to build a big base, much bigger than we had buys for a longer period of time, and it started happening on the 22nd of December. It's probably worth sitting out, really hoping to catch the bottom there. It wouldn't be worthwhile. Let's see what that does if it squeezes. The first one was a little bit squeezy. Is the second one going to be as much? We haven't seen one of these huge buys, buying candles. Most of the positions have been held through. You can see how this DPI here was up in the 70, where here it's only up in the 56. Is there still enough long positions being held? I don't know. So that's asset. Riot and CLS look good in terms of OI. The opposite for Mara, which is good looking, but beyond next Friday, the OI is heavily in favour of puts. So the one issue with that is deciding how people trade, and Mara has turned into a little bit of a meme stock because of who is owning it. And so if it's got a high IV, so here's Mara, it's had a big close, 1, 2, 4, 6, 8, probably about 9,000 puts, 8,500 puts closing in the money, which is very strong on the short dated. And then we've had this big jump here of 42,000 at the money, and a few more there in the money. Let's see what Mara says here. It's had this big buy that's come through, starting at, it's really started to pump when it's got to about $11. So even Stephen, if it gets back to $11 and we're holding this sort of buy in there, these people aren't going to be happy until they're back there. Yes, the buying has gone the whole way through to 10.69 there. Sorry, it has gone the whole way through to $10 there. So it's really got to get back a little bit more before these guys are going to be cashing in on it. Very few people bought on the bottom. Here we can see some out of the monies that have decided to take their profits. They only really bought in the day before. Let's just cut this out. I'll show you what I mean. Here we go. We can see here we've had a really large buy who've traded hard for this gain here, and we can see, I don't know how much money bumped up the other day. It's up 10.6, so people have bought in here at the 9.20, and they've really bought hard for this taking profits here, and they've taken them. I'm not really looking at this at the money. I'm really looking here in these out of money. We've got 3,000, 4,000, 5,000, 5,200 in the monies, opening and closing very, very quickly. Not all of them have closed there. A lot of them are hanging on for the ride, but there's some people who have just traded that single day. Most of us have been having a bit of a break over the Christmas, New Year's festive season. Anyway, there's a very long video. I hope it answers some of your questions and how I look at it using the 0 to 30 for my short dated stuff, then looking at the in the money and the out of the money stuff by changing my filters when I'm playing around at it, using DPI to show accumulation. So this accumulation here started on the 10th of December and went through to the 29th of December. If I go and have a look in December, here's about the 11th, and it really doesn't take off until about the 17th, and then it goes strongly through to the 29th. And let's just have a quick look at that. 12th. Yeah, look, it does look like there was buying, definitely buying at the underlying. So there was quite a lot of hedging. Might have been buying back here. Yes, sorry, here we can see it's buying back. This isn't new long positions. These are the closing of short positions. And so there's a bit of a balancing there. But they're still quite large. The fact that it's not really showing up in liquidity that early. So it's the 17th before it really shows up. People are holding hedging through to the 16th. See what it says on those shorter date ones. 16th over here. It's a little bit there. 16, 17, yeah, it doesn't really start. No, that's true. It doesn't really start until the 22nd. Maybe this was market makers getting in ahead. We can see we've got quite squeezy IV going into here. So that was really, people thought that it might run early. IVs continue to rise, probably at about the same rate as the drop. So Mara's not looking great. It's still down in this 40s, 30s DPI, but DPI does seem to have some be related to price as well. So there's definitely less hedging needed down here, but there is some new accumulation happening. All right, thank you very much. Speak to you during the week. I'll make some more succinct videos specifically about my setup using the all in the NDM50 and the 0 to 30 DTEs in the NDM30, so in the 30 column. I call this the 30 column and I call this one the 15 column because of their size. All right, have a good week's trading.